Okay,
I'm
welcome
ready.
to the Aramie Roundtable. Today's the 26th of November, or a couple days before Thanksgiving. Special guest, Tomas Byron. Thomas runs our ATM Trade Alerts and has a great workshop, probably the most comprehensive options workshop I've ever seen. He's been trading for decades professionally, and he's Italian but lives in Switzerland. So it's an interesting life. So great trader, nice friend, good advice, nice teacher. So lots of great stuff. And he's got a new thing for us, the Elephant Shield, and he's here to tell us all about it. So welcome, Thomas.
Well, welcome everybody. Thank you for the nice thing you said, out of which I would say 50% are a lie. I'm an ugly
No.
person. I'm just kidding.
No, you're
I want to put it straight. Yeah, okay, but anyway. Okay, so today I will be presenting the so-called a new alert service, right? That it comes in line with the others, but it's just a little bit longer in terms of tenor. It's for those people that, like, unlike us, they don't have time or they don't like to sit really all day long in front of the computer, or they may not be able to because they have a different job or different kind of. But let me go into it, starting with the disclaimer. As you know already, this is quite Aramir Corporation and Tomas Byron are not a broker dealer or investment advisor. The content given by Aramir is strictly for educational purposes only. Option, future, bonds, and currency involved risk are not suitable for all investors, and the past performance is not necessarily indicative of future results. I suggest to read this on the full disclosure on the website for clarity. Okay, a little bit about me. I've been I started as an energy trader, a physical energy trader, and unfortunately many years ago, specializing in middle distillates, the things that between kerosene and gas oil, to this way, naphtha. Gas oil is number two oil in the States, and the that profession got me into using a lot of tools on a physical side, but also a lot of hedging options, swaps, futures, and all the stuff that is needed to trade around a physical commodity. Over time, obviously, I was exposed to various experience with international trading oil companies. Never system companies, never like Shell or ExxonMobil, but just traders, right? Uh, and investment banks, or obviously investment banks don't even trade. They do not trade physical stuff, oil, such physical stuff, but they do provide services, investment banking, for trading energy. So you do a lot of swaps, a lot of derivatives, and you work vis-a-vis with credit and investment bankers to provide structure to the clients. And later in my career, I developed my own proprietary trading, system. Put it this way, I traded my own money, initially some friends' money, and then I went into advisory, and I still have an advisory service for families' offices, other advisors, individuals. And I refine a little bit the skills, over the years, and my development in a way into mentoring is just because I know I've been following the Aeromir work from almost the start. And I had this opportunity, and I said, well, let's try. I know I'm not a very good mentor, but I'm trying. So this is a little bit about me. And most important, I'm trying to apply more or less the same concept of what I'm presenting here, or what I do for clients. Obviously, a different scale, with different intensity, with different resources in a way. But I'm trying to give you this sense of how you manage this thing in general, when you trade so-called a book. Let me go forward. So I will give you a little introduction what we have now and what we are planning with this new service. At the moment, I have a workshop that is the, put it this way, it is the base for, it is the, explain you the fundamentals, if you want to learn in details of all the other strategies that will follow. The theme of the workshop was time spreads, right? But not only, also we spoke about, and we follow butterfly, other structure, verticals. Basically, people love to give names to the things, but at the end of the day, they're puts and calls, right? So, so that's what they are. So, and then the natural evolution of that is on what you hopefully learn about the workshop was the implementation of the what you learn. So the trade alerts. By the way, this is the link to the workshop. Here, it's a video. I'll give you at the end of the PDF of this one. If you click this, will be an introduction of that alert and workshop to see what is inside. I mean, as a member, what you will find. It's a 5 or 6 minutes video. You can have a look at what to expect for that one. And similarly, this is just the alert, it's not the workshop, but you'll have an idea how the structure, how to sort of map of what to find inside the thing. Oh, sorry, let's start, and I didn't want to start. Okay, this to give you an idea of the performance, right? I'm not a firm believer of optimizations, and I will explain you why later briefly. But as a sort of, if you're not familiar with what we have done, this is the results for the trade alerts base currently. These trade alerts are more intensive, right? These trade alerts started with $25,000 on the end of, or the 22nd of February. And these are the results. So you start from here. And on 25K, we made $17,248 roughly. These are the metrics of this service. And I will go a little bit deeper on this. This is what, if you are a member of that, that's what you will see. Obviously, you will have the details of the trade, but this is a recap slide, and it takes into account the commissions as well. Don't worry, I'll go fast here, but as I said, you will have the PDF of this. There's no point for me to waste your time on this one. So this is the last trade. Actually, we did one, we had a trade today, a couple of hours ago. So this is updated at yesterday, basically. We didn't trade yesterday, but these are all the metrics from the first trade. And I wanted and this is important because it will be something related to the new service, all right? So if you look at all the metrics here, you have two things in statistics and mathematics. You have average and median. So the average exposure, meaning you open and close the trade, it is 2.7 days, right? The average. But as you can say, in this kind of trades, let me go back, there are some that are 11, and these are longer term trades because this is a strategy. It's not just a single trade. They are double calendar, butterfly, some other structure that I describe in the workshop. But if you go here, the major point is that the median, so if you cut at the center, like a standard deviation, the extreme, it will be 1. So roughly it's 1 day, but let's call it 2.7 days, right? This is the maximum, these are the margins, and this is the risk. There's a little distinction here because you may pay margin, but that is margin because you have a spread, but it's not really at risk, especially with calendar, because you are supposed to close the long leg once you close the short one. So this is basically your maximum average risk. Average, again, is 3,680. The median of this is 3,200. There's no big difference, right? This is your profit. This is the profit per risk, right? And at the moment is, forget about this one, right? But as you can see, the metrics of this, if you risk this average and you made 17,000 on profit on this, you have made 470% so far. And the year, I started the end of February, and there are still a couple of months in a year. So this is a very good performance. And you would say, oh yeah, but why you keep that money in reserve? Why don't you use the whole money? Well, as the name said, reserve, it's where you allowed you to put and adjust position in case you have to. This is an intensive one, right? Second point is that I started at 25 grand to avoid a pattern day trader kind of thing, because I trade very often and I manage this account actively, even not that actively recently, put it this way. But I start this like an active kind of participation in the market. So at the end of the day, the return on risk was 470% as yesterday, right? Starting on the 22nd of February. So this is very important because I never risk more than this average. Well, sometime I was out with 15 grand, right? You see, but for one day. But if you take the average of this plus the exposure in the market, you would see these are very, very good numbers. This is very important because what we're going to see next, it's a little bit different, right? So the elephant shield. The elephant shield, it's a name because, it's stability and it's powerful, in my opinion. So what we're trying to achieve here, remember what I just said. The elephant shield, it's a swing trading option. So we stay longer into these strategies, right? We stay longer and obviously we'll have less theta decay, but at the same time, we'll have to employ more capital because but this position that I will put will cost less, okay? And they will adjust less. So I need less capital on reserve for adjustment. Excuse me. But at the same time, they need to mature some profit to stay longer in the market. I will still adjust them if they have to, but not at the same tenor, at the same frequency as the other one. So today I will show you what's included into this. I will discuss the core concept and the fundamentals fairly in details, the general principle, excuse me. And I will give you there are some other tools that I will include into this. Some are free, some are one, actually it's an extra. So again, this is not a workshop. This is not. This is an extension of a workshop that is separate products. So you will not expect me to explain every single trade and stuff like that. But this is a good way to learn a real strategy. And hopefully in the future, this is for educational only. But if you put this strategy in the market, you will be able to make hopefully some profit. I don't guarantee as you read the disclaimer though. So today we'll see again, I want to repeat myself, the basic concept, the core concept, the rules. That's what I will provide you. Once you subscribe, I will give you another, put it this way, a mini crash course on specific strategy that we'll be using, the rules here, some special hedging that we'll deploy, example, real trades, and additional adjustment and stuff like that. But as I said, the core here is not to give you a workshop. This is not a workshop. So the training tools included into this. There is a thing that I designed that is called Option Radar that is used for analyzing butterfly, iron condors, iron butterflies, and stuff like that. There is an option matrix that is especially useful for time spreads that it will be good to monitor your time spread together with any other position you may have in a different way. So you will see, for instance, into this, the square root of time calculated. So you will sort of decode what you see in some of the software analytics. So there will be a video, how to place orders in Thinkorswim. Oh, by the way, I will be using as a modeling, I will expect the orders, and I will think like my trading will be based on Thinkorswim or eventually Interactive Brokers. Now, I suggest for this kind of strategy, Thinkorswim will be good enough, put it this way. It doesn't have extended trading hours capability, but we don't tend to put it this way, to do a lot of adjustments, and we can go overnight with this kind of strategy. But anyway, Interactive Broker is not that friendly, but offers you the possibility to trade in extended trading hours. So in my opinion, if you can, this is it's a better broker, regardless of the tools it will give you. For Interactive Brokers, I will give you, and this is an extra, an integration to what they call the basket trader. So you can rearrange all sorts of orders and shoot them using the platform, the full platform on a PC. Then there will be some example, historical performance, blah, blah, blah. So I will give you a little manual that I wrote that is really a very vanilla introduction to why we trade option and so forth. So this package, even if you subscribe just for a quarter, will be for 1 year usage. The data you need for these two spreadsheets will work only if you have a TOS link live. And the basket order is a separate product, and obviously works only and is tailored for Interactive Brokers. So the core, what this met, the same principle here were expressed already into the workshop. We trade based on statistics and probabilities, right? And you will see why. We define the risk and medium all time in 7 to 25 days. You may expect to have, again, if the market has no opportunity, I might not put money at risk. Monthly rate will be between 4 to 8. The daily updates and planning notes will be on Slack and sometime on emails. This will be a system very simple to trade, fewer adjustment and low cost. We seek positive theta, flat delta, and basically to control flat delta and vega, so to keep the delta and vega under control. The profit target, you say, all right, this is very wide. Well, really depends. I'm not the owner of the market. We will be from 3 to 30%. Sometimes will be a loss, right? I'm trying to minimize the loss. Sometimes will be more than this, but this is the modeling of your strategy will be based on this kind of performance. Let me go forward. Next page. We use SPX or SPXW options. Every alert can be taken or let's say 90% of the alerts can be taken as a single or as part of a portfolio. So they will be adjusted independently. And when they are not adjusted independently, I will distinguish. I would say, if you are into this, don't do this, right? Because the second position you have is your hedge. Before you enter any, again, simulated trades, the minimum target and risk classification will be an entry. And I will give you advance notice on new possible trade alerts as soon as they are identified. Note, we could use other products very occasionally and mostly for hedging. We are not here to predict the market. I don't think it's necessary at this stage for us to predict the market to make money with options. And we are trying to think in terms of probability of outcomes. Okay, the minimal capital is from which I will start is $7,500. Obviously scalable. Below that, it will be difficult, but you could do it with a broker that allows you to do the X SP, so the mini or the SPX. But I said, this is the base, right? You see, this is the point. Mm, Because this is a longer DTE, we will try to avoid the part day trader rule. I will go, in a presentation, there's a list of what that implied, right? If you are target as part day trader. So we always adapt to the market condition with minimal adjustments. So what are we going to trade? The front is going to be 7, 10, 15 DTEs, days to expiration. The back is going to be 10, 35, and so on. This will be based, and you will see later, on the opportunities. And as we say, we trade based on statistics and some other stuff that are quite unique, right? But the strategy we will be using combination or as a single strategy will be calendar, double calendar, diagonal, double diagonal. So these are all names. These are all puts and calls. Butterfly, verticals, and so forth. So let me clarify this up front. The approach I'm a professional trader, so I'm sharing this only if it doesn't compromise me, my profit, my clients. I don't give free meals to other people copying this on YouTube. So I will share as much as possible. That's one of the reasons why, if you are profitable, you trade, you don't write books, or you don't do mentoring, right? But this is a compromise in a way. I decided to share some of the things because the way I do things are complicated and you will need to invest time, money, and not everybody will be able to do it. So I'm pretty confident when you see what comes next that you will not able to do it in the selection. Right? Everybody can put on toss a butterfly, but you will see why my butterfly is different from the rest, or my calendar is different from the rest. So by sort of, this is my pledge to you. I will share as much as possible, right? And you will learn by keep staying tuned, put it this way. But certain proprietary details and stuff I will not share, not because there is a secret, but because I don't think sharing, you will not be able, unless you invest a lot of time and effort and money sometimes, to implement a kind of strategy with that analysis, right? I'll do it for you. But if you stay tuned long enough, let's say you will learn more or less. But my goal, to be honest, is not you to learn in a week. I share on my secrets, and then you go on your own, and and I work for nothing. So I'm a trader. I'm not into charity. I'm not into just mentoring. So I want to make some money. I want everybody to make money, but I want everybody to understand that this is not a workshop, right? And you will like it only if it's based on performance, not past performance, but from now on future performance. You make money, I make money, everybody makes money, everybody's happy. That's what this is a trader's talk. So predicting future price of market directions we said that already. We need to react to the market though. So the react means you need to adjust when you have to, even if it's a longer term strategy. The only thing that you can control is the amount of risk that you want to put and the odds, if they are calculated right, when to place it, when not to place it, how to combine position. So in this selection of what you trade, according to the frame of the strategy, there are basically, to simplify, 6 steps. The steps are, number 1, we analyze the market status. Number 2, we select strategy and statistical performance in similar market regime. You will see what this means further down the presentation. Then we select the appropriate strategies. At this stage, this is an alert. You get informed of possible pending alerts after we have done the research. The trade alerts at this, when they pass, when the market is open, when we can place them the right time, will be sent real time to you in Slack or via email. They will be adjusted let's say if I send an order buy at 1 and the market is 105, I would say now move to 105 as much as possible, right? Most of them will be a GTC order because it's a longer, so we'll be fishing in the market. We will have some numbers there that in case the market gets there, we're happy to get filled, but we're not chasing the market here, right? So they will be dynamically monitored and adjusted if needed. Hopefully it won't be needed. And then we'll have a clear exit and good until cancel levels where you get out happy with some profit. Now, let me be clear. I heard sometimes people say, oh, I will teach you something because I don't like to be, or we don't like to stay glued in front of a computer. I am glued in front of a computer, and we are not alone. I have as I said, advisory service and not trading alone. I have other, but that have nothing to do with this mentoring. But let's say we are, this is our job. We don't come from another profession. So we will monitor the market for you. So even if you don't have to be glued to the computer, I will be glued to the computer all day, and I will alert you if something change. So this is very important for me because I'm not looking for a strategy to pass you and then go rollerblading, right? I'm looking for a strategy that you can learn and put orders without being glued to the computer. But again, this is an alert. It's not, you will learn if you want. Then you will dedicate more time. You will learn how we manage this position with time, and you can do it on your own. But for the time being, this is an alert. So why we trade SPX or SPXW? Obviously, it's because it's a European style. That means that there is no exercise at expiration. So there is no risk assignment. It's cash settled, meaning that they take the difference from the closing price and it's all accounted for you. Is a granularity that it trades every day and is very liquid. It's the most liquid in the market, and with a zero DTE, you can manage risk in a shape or form that no other index or any other product can. So market status. When we say, well, we establish what is the market status. This is a generic name, right? So let's see, how do we make money with option if we sell the premium? The difference is this. There is what is called the historical volatility and the implied volatility. Implied volatility is what the market, the future forecast of the volatility that will come. Volatility is how volatile this instrument will be, and therefore, what are the odds of reaching a put or a call price that is called a strike, right? So there is a tendency here that the implied volatility, so the one that makes the market, by the way, that is needed to solve the Black-Scholes formula. So basically, it's the egg and chicken. If you don't have the market value of the implied volatility, you will not know the rest of the value of the formula. So that alone should tell you that the formula itself it's not very efficient, because you need the market to be open and you need to know what the premium is, right? So that's why modeling is different on this stuff. It's different and is difficult. So, but in general, the volatility risk premium versus the historical is advantage. So that means that the implied volatility in general it's 4 percentage point, 4 to 5, as you can see, higher than the realized volatility or the historical volatility for any given period. And this is called the volatility risk premium, or VRP. There are many studies, but you will read this, but historically, as I said, it's 4 or 5 volatility points premium. So that's what we're trying to catch. We are not trying to catch the direction, because you can do that with leverage, with future, with other things, with charts. If you have that ability to catch the direction, shut the computer down. You don't need this. But if you are not able to, you are trying to catch a phenomenon that is established in the market. And this is like an insurance business, and I will give you more numbers. Why is that? Because for the market makers, us, people like us that sell premium, you need to have an incentive, like an insurance, to take the risk from the market and with the reward, absorb the risk, hedge the risk, and basically offer an insurance kind of service to the rest of the market. The rest of the markets are people with opposite position from you, or are long-term investors, hedge funds, whatever they are. We don't know why they are in there. Institutionals, the market is huge, but we covered that. That's where we hope to make money. Not by getting right direction. You will read this with more time, because, as I said, I will share the PDF for this. So hopefully, when we sell, when we write or sell options, we're trying to harvest that premium. There are many ways to harvest the premium. You can do swaps on derivatives that take implied volatility as such, trade the VIX, trade this, trade that. But because, as I said, because of the granularity and the liquidity, the low cost, among other advantages, even the advantage, if you are American, the tax break on this, we decided to look mostly at SPX to do this. So this is, as you can see, though, the volatility risk premium of the S&P 500 from 91 until now, has some major swings, right? So, but this is the average. So obviously in these swings, you have to be very careful, right? Because remember, this advantage that you have is also a risk that you're taking from the market. So whenever you enter a position, you are not in the business of risk aversion, or you will pass on the other side. You are in the risk-taking kind of business, right? Not, you want to take the risk. The fact is that the risk has to be a proper risk, a risk that give you a good chance of reward, right? So the variety of news, pending news, information, and all will contribute to these swings. In the last 30 years, there have been wars, there have been, crisis, there have been this, there have been that. But at the end of the day, you want to surf that curve in a way that the odds are in your favor. Now, as you can see, why we trade SPX. Okay, this is the same analysis, but on the European stock index is the equivalent, if you might, of the S&P 500, Nikkei, or the WTI crude oil, Euro US dollar, or gold. But you can see there is, it's good enough. It's good enough for now for us to focus on this one. Obviously, you can do some dispersion trade. If you are very sophisticated investors, you want to do something, the hedge one of the instrument you trade with another, but we keep it simple. This is just academic kind of work. So there is a skew, though. There is a skew. You can see that 1 month realized volatility and the 500 is 1 month realized volatility, the standard deviation, and there is a skew toward certain levels. Now, that will introduce us to the skew. What is the skew? Very briefly, this is, when you talk about volatility, something can be like this, like a lot of ups and downs, but a trend, general trend, or a jump. It goes up, then it jumps a lot, and then it keeps going up. So volatility, when it's measured like this, will be similar. They will be very similar. The difference will be that when you trade a position, and you trade position to stay in the center, here you get stop left, right, right, left. Here you get stop only once. That's very important, because you will have a major, if you have some measure of edging this, the rest is good. In this case, even the volatility number itself will be the same number. This is no good because, you are here, you want to keep it center, goes here, come there, blah, 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 blah. And at the end of the day, you spend money in commissions, erodes your potential profit. You take a lot of stop losses, and it's not good. So this is the first thing, to analyze whether the market is in a Brownian motion or in a Poisson process, right? We are doing analyzing. Then there is the phenomenon of skew. From 1987 crash, the equity markets in general are a negative skew. See? So that means that there is a premium for implied volatility on puts versus calls. It is changing a little bit with the 0DT on a short tenor, but I remind you, we are discussing now a longer tenor here. This is not always the case because gold, for instance, is the opposite, right? The Forex is more of a smile, what is called a smile. So this is part of the analysis you will have to do before you enter the position. So now, without getting very technical here, but these are something that are very important to understand. That is the variance, the skewness, the kurtosis. So that means what is the outliner looks like. So in that skew, put it this way, how's the convexity? How this curve shape? And these are all equation, right? But it's an analysis that you need to run. So again, the skew is due to various factors. The supply and demand, the general tendency of protecting a portfolio with puts, and so forth. So this is plenty of books to describe this kind of phenomenon. If we trade the SPX, the good part is that the granularity is $5. It's a 5,000, 6,000 index with $5 strikes, trades every day. So you can really accommodate the curve and the hedge nicely. That's why we are chosen to use SPX versus using Apple, Tesla, or any other liquid stock, individual stock. Apart from the fact that there is a risk of assignment, earnings, all the stuff, it is just the size, the commissions, and the granularity, and that makes the SPX a great tool. So when I say, okay, we trade the strategy of statistical performance, somebody in the past asked me, what is it? It's you look at past performance or the index, and no, I just monitor, in this example, for instance, a trade, and I monitor every trade I want to take. And that's why I'm pretty confident you will not be able to do this. I trade every single trade that are in my, put it this way, medium list. Then there's a short list, right? And I put them in a statistical basket. Let's say this, for instance, I took it just an example. This was a tool that we designed. This is not actually the tool I use. The tool I use MATLAB. It's complicated. It was designed for me in my advisory business. This was designed by colleague to be able to, and it's on sale as well, not now, but it was, to be able to record from TOS or other information services the prices, exactly that spread every minute, and to build on that, what you will see. There will be this. There will be the specific trade will be analyzed. Specific trade, that means, what does it mean? It means a Wednesday, in this case, is a double calendar, center at the money, 10 up on calls, 10 down on puts. It's a double calendar. And you will have, and this is very important, the float and the fix. What does it mean? Well, I know that this is not very popular with retail, but the float, every swap, this is very important. The float is the continuous swing of that trade during the trading day. In this case, every date here, every bar here is a trading day. As you can see, sometimes it closes in the middle, sometimes outside. So it opens here, close there, and that's what's trading outside the line, right? So The float means that if you can imagine a straddle or a strangle, always at the money rolling from open to close, right? In this case, it's not a straddle, it's a double calendar, but it's the same, any position. You open at 9:30 and close at 4, let's say. Okay, that's float. And obviously, if you have a strategy that is profiting from decay, theta decay, you would be making money. The problem is that you had to stay always at the money. At one time, you had to design and you had to fix it. So in this case, it's fixed at the open. So at the open, this is fixed. This is float. This is fixed. It's the same trade, but it's fixed at the open. And then the question is, okay, but then, and everyone is this is a day. And then the next question is, okay, but what if it's fixed 5 minutes later, 1 minute later? Every time is fixed at a different time, right? Let's go forward. You can make some analysis. This is actually probably not the best way for me to explain to you what they keep inside, but it's just one way to graphically visually see what I mean by statistical comparison. Here you will see, the outliers, what falls inside the median. These are all stuff that I would say it's basic statistics. But then we go into a different kind of representation. This is a Wednesday trade done, I think, let's see, later it was a PMI or something, put together all these dates, right, for comparison, from open to close. 1 minute from the open because the granularity is 1 minute. It was recorded with the software that you saw before or any other software that takes live data every minute, but this is a specific trade float. You will see that every day has a different story. There is a super champion that from open made like 50%, and there is a donkey here that lost about 10%. But in general, you can see that this trade is good because it's from zero, from start to end, it generally trends higher. It means that the premium is going higher. Remember, in this case, we buy a premium low, we want to sell the premium higher. So that's good. And you can say the moving average of these little dots here are positive. So the question that this will give you different information. One will be, okay, if I open from the open, right, you will see there's a first acceleration, then you pause here in this block. This is a dull time. So maybe there's a first indication, say, for me to enter at this stage, taking the risk, not really a good idea. But then versus the close, you will accelerate again. Everyone will trend higher, as you can see. So probably if I had to make a first judgment, I would say, okay, I'll take a trade from the open, maybe close it here or don't add anymore, and then take another one from this time on average, on this specific trade, not everyday trade. Also, give me another information. It would say, okay, that day was trading at this level, at that level. These are the spreads, right? So the question is, would it be expensive? Would it be below or above the moving average of this trade? So roughly, will it be expensive or cheap, right? So that's one first indication. So that's why when I mean statistics, this is the fix. Same trade, that was at the open. This is the fix at open. So if I fix this at open, that's what happened on every single day. Obviously I select some here, but I can take any date I want. So as you can see, okay, that's the average, but once it's fixed, it doesn't look as good as the previous one, obviously. You see, because here at the end, there was only one that really was bad. The rest was more or less all profitable. But that's the dream. That's the optimization. That's the reality. The ideal one will be this one. See the blue one. But what about the red one? Obviously, this is just a step for further investigation. I want to know what happened here. Why this went so sour? Maybe some news, some specific thing or whatever. Next. Again, that was when there is a PCE week. So this is the float. This is the analysis, every single trade. And this is the fix, right? So that will help us decide whether I want to have the alert or not, whether it's too expensive already, what time to add them, and so forth. So this is, again, it's what we take here. We take all these numbers. We take the buy, the sell singularly, and then we combine them in the way we like it to see that particular trade. That's another visual form to visualize that. In this one, we add as well the entry at open, right, at 9:30. We see the acceleration of the premium, and here we have the spot. Spot stands for underline. So now we put in relation what happened here between the trade stake at open, this line here, right, from the open, where you see the spot here is the number, the spot is the underline, and this is the percentage gain on a specific trade on Wednesday. But this spread, in this case, I think it was a double, similar to the other. I went out and looked for the same trade, so it's not confusing. On top of this, you will see that there is a moment of acceleration here. This here is red. There's at the end of this, you would see how to read this. We divided the trading day into segments. 9:30, 10, 10, 10, 11:30, 11:30, 14, 14, 15:30, and the last half an hour. By doing this, we can select not only time. Remember, I told you the only thing we can decide is when to put money at risk, what are the odds of putting the money at risk, whether or not that's expensive or cheap. But that will be a judgment based on statistical numbers, right? We take these numbers every day. So you will see here that there is a moment of acceleration, obviously accelerate because you can see the underlying comes off and the implied volatility expand, right? So from here to here, there is a 7.5% acceleration, right? And you see this little triangular dot. I know this is small, but you will see it. This is artificial intelligence and is looking for an exponential acceleration of a statistical deviation, meaning that when this accelerate on a consistent basis, this will be marked. This will be like, hey, heads up, this is good, or this is not good. All right. And that's how we code this kind of thing. So if you continue to this, there will be other days. Every day now is analyzed with the underline. See the spot. The open at 10 is fixed. You can see. Obviously, we can choose another open. So, and the open is the price. I don't know whether you can see it, but here it says open, this trade's open 1950. At the open 1950. See? And this is the line. So from 1950, the open, that's what happened to your P&L. This is the underline. This is artificial intelligence for looking for clues. And this is, obviously, I have to pre-select. I cannot check the entire universe of trading. I would say today, I think, and this is the trader judgment, it's good to put this kind of trades. Let's put it this way, look deeper into this in the past to see what is the tendency of this, right? Then once you are done all that, right, there is the strategy selection, as you just said. Okay, this is very boring and probably you know, but a calendar is a time spread where you want to cash in the time decay because the one you're short decay faster than the one you're long. Basically, that's what it says. But not so fast. That depends on implied volatility, and that depends on the premium, the general direction, the moneyness, the time that is left. You have to think in these terms. Every time that you think you are reaching your goal, the spread between the two, the differential between what you sell and what you buy, may be one of the most important components because may affect the performance of your trade. Remember, you want to, in terms of calendars, we buy something at 1, we want to sell it at 2, right? So we want the spread to go up. So because in general, there is a premium on what you're long versus what you're short. So the short is a sort of discount of what you're long. But the long will be closed the moment the short expire or as soon as you close the short. So in this case, specific trade, we want if you buy low and we want to sell it high, keeping risk under control. In this strategy that we will alert you with, the trade alerts, the range is 15, 30 DT forward. That doesn't mean that we're not going to open a trade and close the trade 2 days later. That means that we're not going to have a 0 DT trade in this alert because you don't have enough capital, you don't have enough time, and it's not this the right alert to do the kind of fast-moving trades. Then we will trade broken wing butterfly. But here, broken wing butterfly, I have extensive studies on this. It can be negative or positive vega. So it depends. If your center is negative, if your outside is negative, if it's positive, meaning that you need to get to the center, right? So we trade this completely differently from the rest. The rest of the people I've seen around, they're trying to go for a small profit, but in a way adjust it with other positions and taking a big risk. I turn this upside down. I want to break even. I want to make a small profit adjusting eventually to pay just commission. But when I make money, I want to make big money. So it's the different, and I want to buy in cheap. And these are few examples of these positions these are particularly good example, but being unlucky because I didn't find any bad examples. These are, by the way, some of these are real trades. I just select some of the real trades from some other trades I share in the other community because the other alert system has also longer term strategy. So are few of my own strategy, some of my customer strategies that I deploy as an advisor. Some of my, it's a mix, put it this way. But obviously, this is not starting, as you can see, this is 15 grand. This is 10 lots. This is not $7,500, right? I won't be here talking to you. This is this is not 2, 3 lots. These are 10, 20 lots, right? But just to give you an idea of the percentage performance of this thing. And this were about a week into the trade. So this is roughly without any hedging included. This is the base of, so this, please disregard this. This is roughly what the strategy will put together will look like if you had to represent them in option omega. This is another one, but this is obviously you can see this is not hedge and it is just one component and the two will smooth the curve. Something like this. Okay, you can see here, this is not hedge. This is just to get an idea after you have done all the analysis, how this look in the past without the hedge. But as I said, the secret, even in the long run, is the hedge. Okay, considerations, transaction cost, market conditions, risk reward analysis. This is the logical stuff. These are for you just to read the comparison. Yeah, butterfly are probably cheaper theoretically, but they cover a move smaller than the rest. So the odds of you sitting at the center, they're slim. It's just a comparison, nothing really special. The PDT rule, pattern day trader. You will read this. We will try to avoid by applying few tricks to avoid that because, as I mentioned before, we start with $7,500. So, but everything goes well as soon as you leave. Put it this way: if you have a bigger, this won't concern you if you have a bigger account, right? But let's say I, as a B monitor, starting with 7,500. This is what Trade Alerts will, once you are inside, will look like. There will be a library, the messages, everything will be recorded. This is the one I talk about, is the option metrics, where you can monitor your positions and you will have a translation of your, it's called weighted Vega, right? The Vega here shown in TOS is $5,000. The weighted Vega, and you will have to adjust it. And there are videos and manual how to adjust it, is only 600. So I always use this phrase, what you see is not what you get, in a good way and in a bad way. Like the theta is not this, but actually it is negative, right? In this example that I took. This will be 1 year and it's included. And this is the same software. There are many pages. This is just your other metrics that you will find inside the same software. This is the option rather that it will take fully adjustable. You will have the butterflies, the various legs, the iron butterflies, and live, obviously. You will have the call and puts open interest, updating live with TOS, but in a nice representation that is missing in TOS. I had to cut this in various parts, but this is the same. As you can see here, you have the other metrics, right? The iron flies, return on capital, on investment or capital, open interest and stuff. This, it's a good tool that will help you analyzing better the butterflies. This is the pay one. This is the basket order trader only if you are interactive broker customer. It is a tool facilitator to use basket trader from EBKR full contract, full software. There are videos, manual stuff. Basically, what you do, you combine all this. They will prepare in a shape to be integrated with the system and have all these orders ready to be put in the market without manually adjusting them. Okay, now we are at the end of this, and this is the deal. These are the regular prices. Is for a single quarter, $375. That makes this is the general, say, no discount or nothing. So it's 1,500 a year. If you want to go quarter by quarter to see the performance, it's good for me. I mean, it's put it this way, there is no discount though. The full year regular, if you buy the 4 quarters, you get a 15% discount. It's 1,275. Only until the 3rd of December. Let me be straight. I will not do any promotion on this ever again. And I tell you why. Because I think this is really rock bottom prices. There's not going to be more promotion. But just because it's Black Friday and is coinciding with the launch of this, I sort of, if you only on the year, I'll give you another $100, and it will be 1,175 for a full year if you order by the 3rd of December. Obviously, you can think about it. If you don't want to take the offer by the 3rd of December, you subscribe later. You can do a quarter. You can do this. It's up to you. The basket order trader is the last one software that works with interactive brokers and is very, very good. If you trade interactive brokers, I really recommend that. It is $200 regular price per year, only for Black Friday, Sunday, 50. So it comes with the updates, with the manual, the video instructions and stuff like that. That's all. I gave myself an hour. It's 1 minute late. When you will see this, this is a link to the PDF, right? When you see the video, you copy the PDF, and from the PDF, you can start the video. There is a video there talking about the other service, the alert on the ATM, and that's it. That's it for me. And if you have any questions, I'm here to answer those if I can.
I don't see I don't see any questions. We do have a URL for the page to order. Let me paste that into the chat for everyone.
Sorry.
There it is. Okay, so that's if you're interested, that's the link to go to. So yeah, no questions. Oh, and Scott says if I have other alert services, is there a
Okay, that's a
benefit?
very good question, Scott. Now, this is specific for those people that said, I don't want to stay, I don't have time to follow this. It's a longer time frame. If you are already into the other one, I don't think this is for you. You will have some of those trades. These are specific trades, though. It's a separate service. Since my advice to you, if you're already into the other one, you already have the workshop, just stay with the other one. There is no need for you because these are less trades. They are specific longer term trades. So you don't need both. That's for sure. And I will cover some of these trades into the other one. The reason why I don't cover this because the other one is active. For this takes longer to mature a profit. So for me, it will cut into money in reserve in the other service, right? But as you know, there we put longer trades, some of these trades. This is just specific because you don't have time, you don't have a capital, you want to stay longer, or you like, easygoing adjustment. Not that the other is frantic, but the other one you need to be hands on deck, because today, for instance, we stay in a trade for I think 12 minutes. We make 120 net. We reach $2,800. We make $120, unfortunately, because later on was making a little bit more. But nevertheless, 13 minutes, $120, less commissions, $100 net. Now, you don't expect to do that on a 30 days, right? Maybe to make $100, you have to stay 1 week. So obviously, it's up to you to decide which one is for you. How do we get the EEB basket trader with your link? Well, that once you subscribe, it's in my server. I will have to give you the password, the link, and everything. So you will send me an email and I will give you the link, valid. I mean, you can download it, obviously, and the software, it's using Excel, full version, not 365, right? You need the full version. Once he has a time bar, you can use it for a year, right? According to you. Then if you subscribe, you will renew, put it this way. But that is directly, you had to send me email once you purchase. I have approve of purchase, you send me email, I give you the code, I give you the password, and it's only working on your machine. You can download it, I think, 5 times in your machine, but it's linked to your machine. Obviously, you can if you change your PC, I will you send me, I change my PC, I will reissue for a new machine for you. I hope that
And Bill
Barry
says, why
answered.
do we need the basket trader when we're doing 2 trades a day, 1 or 2 trades a day?
No, you don't. Absolutely. For this system, you don't. But I took the opportunity to put it there in case you want to start. I, I can tell you this. To trade this kind of service, you do not need them, for sure. Unless you trade some size, or but I took the opportunity since it's there to promote it, put it this way. I think it's more needed for the other guys, but you know, not many like EBKR. And I thought that this was a good way to move around orders in a very good way. And I researched, and there is nothing similar in the market to do that. But as I said, you definitely for this alert you don't need it.
And did you want me to set up a link to buy that on the Elephant Shield page, or do a separate one?
You can, but as I said, I don't expect an avalanche of orders, that because that's for this
Right.
service specifically. But yeah, you can put it there if they want, but has to be manually set because for everyone I issue, I have to set a specific password and a time bar, right? On basically locking the system. If not, I will sell one, and I will find in China they have a
Well, I can set
company
it
that.
up when somebody buys that you get an email with the purchase
Yeah, that's
information.
right. That's right. Yeah, sure. Yeah, that would be great.
All right.
But again, let me stress again. I will recommend you do not buy it at the moment unless you really need it. Because let's say if you're already trading something else on your own on Interactive Broker, and you are here now and you have different trades, that doesn't really cover my trades. I'm not gonna. That can put any trade inside, right? Interactive Broker. If you are an Interactive Broker customer, you want to have the tool. Obviously, there is a video already. I will share once you subscribe to the system, or even for free, I share a few times. The presentation video, I will share it again in the free Aeromir sites uh, to have an idea what that is. But if you have your own trading already going, obviously you can put any trade. But by the frequency of these alerts, I don't think you need it for this. But have a look at the video before you buy because it is very simple. It is very simple and for me very efficient. What it does basically, you let's say you want to buy a butterfly, right? But you don't know pre-open. You don't know what level is going to open. But you can have 20 different levels, right? All set up with 3 minutes work. Then you save that file in a format that is specific format for Interactive Brokers, right? Then you use it's called basket trading, their videos as well. You park them there, right? You open them, and then you put them live where the market is, period. That's it, with 3 clicks. And it will save as a common separated file. So you can store, during the weekend, you can have 1,000 trades. Then you load them into Interactive Broker as a common separated file, and then you fire at will when the market open. Put it this way, with moderation though. The first week I used that, I I was a bit too, I had like orders, I like 50 orders, every single levels everywhere. The link PDF doesn't require anything. It's open. If it doesn't work, send me an email, but it's open. I didn't put any password for the PDF. So it's open, it doesn't expire, but it is on my server because uh, you never know to control it. Sometime I don't want to say, but sometime Aeromir is very busy. Put it this way, and to be sure, it's there. I did it this morning, and it's there. You can download it anytime you like.
And Lindsay asked how many spreadsheets are included and are these necessary? I think he's talking about Elephant Shield.
Uh, not really, not really. Uh, these are, I mean, the one are free. If they are free. So you don't want to use them, don't use them, right? For a year. But again, you may find that they are useful in general to better understanding what you're doing to follow. But you can keep following what you're doing, but they're free. You want to use them. If you don't want to use them, don't use them. You have 1 year to decide whether you need them or not. Put it this way. And it is part of the package. I found them very useful, but and that's why I designed them. Put it this way. But if you don't and you are happy with what you have, it's okay. At the spreadsheet, there are two. Let me go back. In numbers, I think there are two. I don't want to go back because the video will look awful. I have another one here. I think there are two spreadsheets. The option radar for the butterflies, ironflies, and the matrix, option matrix.
And I guess the other
But
question with the spreadsheets, do you need them if you're going to tell people what the trades are?
no, no, no. That is for you. I'm not gonna. I will give it to you with the manual. You will use them. If you want to put these trades or other trades in it, you can. But it's a tool. Uh, that's it. I'm going to share with you, for a year. That's it. You don't need them to follow these trades. If you monitor your trades already in a shape or form that is good for you, and you're happy with that, you don't need them. But as I said, if we take a time spread that has some little stuff in it that will help you to better understanding your risk and your position. Put it this way. But if you use TOS, if you use any of the other analytical tools, it's fine. My orders will be in TOS. The link to the PDF. You mean this? You want to try right now whether you can download it? Combo string.
Could you paste it in the chat? Maybe they have a typo.
Well, in a PDF, this you can click, but I'm on the presentation now. You cannot click. You had to type all the long name there.
Scott says that the content is expired. Maybe there's a typo.
Which one
And
expired? Sorry, which
Scott
one?
Scott says the content is expired.
Of the PDF?
Yeah,
Hold
maybe
on.
he's got the wrong letter or something in there.
You type all this thing and he said that it's expired. Why don't we do this? Look, I'm gonna give it to Tom, the PDF, and he will put it together with the page after this.
Okay, that works. Yeah.
Okay, so
Oh, he used the image. I guess the QR code.
okay, the image should work. I don't know why
Eric
it's
Eric
expired.
says the QR code works.
See,
And Bill says
see,
the PDF works. So and
see,
Justin says
this
it's
the
fine.
word is beautiful because everyone has a different. It's like the lines that I show you. Some is the winner on top, and some is the loser.
It's
So
like the
sometimes
market.
it
Everybody
works.
has a different experience.
Exactly. So it works. It works for me. It works for, but try again. Maybe there is some block in your phone if it doesn't work. But see, the QR works. I don't know. Anyway, we're gonna post it anyway on Tom if he has time. But I think the
Yeah, I'll
QR
put it on
works.
the I'll put it on the page. Yep.
Oh, be sure you don't have to log in because this is Asus web storage. But the sharing, I am the subscriber. So, but I give you access. You don't have to log in. It will open anyway, whether you are Asus or not Asus. It has to open, right? So they may try to force you to log in and stuff, but you don't have to register with them because even if you don't have an account, you just get access to my account. I don't know. Was that clear, Tom? That
Yeah, I'm gonna try and type this in, see if I can get it.
obviously they will try. These guys. They will try to say, yeah, log in, give me your name, but you don't have to register. You just get access to my space. But anyway, we'll put it into the arrow mirror. In fact, I sent it 2 hours ago to Tom already, PDF
Oh, it worked for
on
me.
your email.
So let me just give me a second. I'll upload it to my Amazon server. Um, all right, just a second.
You see, it works. No, there is a. This is nice because you know that testing
There.
live.
You should be able to
Yeah.
put that link or click on the link and it should download it.
Now the video is on YouTube because this the PDF here, not the PDF, the presentation, the PDF, you can embed some video, but has to be on YouTube. So when you click on the PDF, it will take you when they describe what you'll find inside the other service, but it's similar what you will find here, right? But when you do that, it will get you to YouTube, my YouTube, where there are only a couple of videos. As you know, I'm a trader. I'm not doing this for. I have three things inside there, and all of them are the same as Aramir. The Rhino Hedge.
Rhino hedge.
What is the Rhino Hedge?
The Rhino is a trade that Bruno used to run.
Yeah, nothing to do with the Rhino. This is the
No.
elephants.
Oh, Justin says pulling your leg. Okay.
All right, we are in Africa. All right, but,
Right.
uh, anyway, if you have any other question, I mean, it's pretty straightforward. I don't know. I hope we're gonna make money. I'll be very careful, put it this way. You will learn along the way. I'll do my best. I think I expressed everything I had to say. This is again, if you want to buy the workshop, you don't have to. Is in line with that, right? But this is just the alert. Now we are into the alert space, right? You can
Right.
learn. You will take longer without going into the workshop. Obviously, the workshop will be the formulas, why you do this, why you do that. There's a bit more detail. But you know, if you already know this, or you don't care, you don't have time, you know, this will be enough. Any
All right.
other?
I think that's it.
That's
So
it,
thanks
man.
so much. I'll get this posted online and if you guys are interested, I put the link in the chat already.
And this time, Tom, don't make that mistake that you say, if you want to learn how to trade this, if you want to learn how Amy trades, subscribe to Thomas and vice versa.
That was on the Labor Day page, which
Yeah.
isn't live anymore. So yeah.
Just
I
kidding.
checked.
I'm
It
pulling
looks
you.
good.
It
It
looks
looks
good.
good. Yep.
All right.
All right.
Thank you,
Thanks
guys.
everyone. Yep.
Thank
Thank
you.
you.
Bye.
Bye.